Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you, too. So we're talking McDonald's. I think we got some disappointed investors in this company over the last, 7 months or so. The stock's down pretty significantly this year. It's $50 off its all-time highs that it reached just in January. I mean, you guys have data on this where, McDonald's isn't doing well because, I haven't seen a run like this to the downside in McDonald's for a while.
Yeah, so whenever we look at McDonald's, I think that, long term, it's done a really good job of improving its loyalty consumer base in terms of when you think about app adoption. I think it touts around 150 million, app users, and it's done a really good job with just technology adoption, improving efficiency, improving personalization, things like that. But what it's not done well at is holding up its what it's most known for, probably, which was providing value. I think that this pricing pressure is really what's holding McDonald's back. It's really alienated a lot of lower income consumers, and even McDonald's leadership talked about how consumers are being more discriminating with every dollar they spend. And so this has really weighed on, foot traffic and also just in general consumer sentiment and how enthusiastic consumers are when it comes to shopping or going to order a burger from McDonald's. We see in a lot of our mentions people saying, why would I go to McDonald's and spend, $15 on a value meal whenever I can go out to eat in a nice restaurant and have that or less? And so I think that this has been really what's driving the negative sentiment and, negative foot traffic for McDonald's specifically. But the company did roll out a $5 meal deal, and we do see this having some positive feedback for McDonald's. We see those consumer searches for the value meal up and staying up even after that McDonald's launched the meal. We also see that McDonald's extended this value meal, so we think that that's a good sign that they're seeing some traction. And we also, whenever we look at web visits, this is an area where typically we've seen these web visits kind of temper for McDonald's, because what's driven their same-store sales in the past has been these rising prices, has been a rise in average ticket value, not necessarily foot traffic. But when we look at this, we see a pretty significant resurgence on a quarter-over-quarter level. So this tells us that this promotion is driving more people to McDonald's, and when we look at it on a year-over-year level, it's up about 2%. So that would be a change in the trajectory. So this is a nice little boost, at least for McDonald's, heading into this earnings. And we also like the fact that the stock has pulled back pretty significantly. Like you mentioned, I think it's down almost 15% year to date. So the expectations may be a bit lower, although the investors will expect to see some positive results on the back of these pricing strategies that they've recently employed.
Megan, obviously comparing to other kind of quick service fast food restaurants there, but where do companies like Chipotle or Cava factor in here, where they're at a higher price point, it's a similar kind of efficient meal, but maybe it's a little bit more expensive for a perception of higher quality, to your point? If our dollars are being more strictly spent and perhaps there's a trade-down effect, does McDonald's potentially stand to benefit from that? Or is that trade-down effect going to places like buying food at the grocery store and making meals at home in order to replicate kind of the same type of food that you maybe get at a Chipotle or a Cava?
Yeah, I think if you would have asked me last quarter, I would have told you that McDonald's wasn't benefiting from the trade down effect because the prices were so high. It was more in line with going to a Chipotle or going to a Cava or a Sweet Green or something like along those lines, except for you're not getting those perceived health benefits, right? You're not splurging on something that you can, talk yourself into convincing this is good for you. But now I think this quarter with that value meal, they are benefiting somewhat from a trade down effect. We did see some pricing power, especially in names like Chipotle. And so now that consumers have an option that seems a little bit more affordable, we do see it driving a little bit of traffic for McDonald's that we didn't see last quarter. So I think that that's something significant that could be a change whenever McDonald's reports on Monday.
Megan, when you look at this, it's going to, provide that short-term lift here. They extended it. maybe they don't keep it on, for a while. But doesn't this like hurt margins at some point? Because if you look at Chipotle's earnings report, it was pretty good across the board. The stock traded up to 60. Now it's below 50. And I'm like, boy, even if McDonald's meets or beats expectations and has good traffic and maybe some increasing same-store sales, that it's not going to help the stock, because that really scared me after that Chipotle report.
Yeah, I think that this is something, LikeFolio data, we can't necessarily speak to margins. So that remains to be unseen what kind of impact this value meal has to margins. I think it's going to be really important to see if people are then trading up when they go to McDonald's. Maybe they get a value meal, maybe they add something else on that's not on the value meal while they're there. Maybe, now that they've gotten a taste of McDonald's again, they repeat back for another trip. So, does this have the cascading impact that McDonald's is hoping for? And if it does, I think that could certainly help boost the stock after earnings. Our score definitely leans a little bit bullish because of this inflection point that we're noting when it comes to traffic. But I think the real test is going to be on a longer term scale, as you mentioned. Like, is this sustained? Does this result in those repeat trips? Does this result in those upgrades and things along that line to help boost McDonald's where it previously was struggling? So we'll see. We'll certainly be listening for that. But it is good to see, at least on our end, we're starting to see some improvements in sentiment. McDonald's was really struggling from a sentiment perspective. I think it was around 60% positive, which for a place where you're going to get hamburgers and fries, that's pretty low. And we're starting to see it boost a little bit. So for us, that's a really nice kind of long-term gauge. So something to watch. And we do like that there's a lowered bar heading into this earnings event, but there are still some unknowns, some potential red flags when it comes to margins.
For our investors who are out there, maybe think about things in a little bit longer term time frame. Megan, you had mentioned seeing the sentiment in some of the social media posts that you're analyzing, saying, why would I spend my money here? I could spend it there. And you mentioned how McDonald's own CEO said that there's a little bit more, strict with the dollars being spent. Is there anything that you're seeing in sort of the general sentiment of just your holistic analysis that suggests that we're in a bit of a gully here with spending, or if something greater is perhaps on the horizon? Is it getting worse, is I guess what I'm trying to say?
I don't necessarily know that it's getting worse, but we definitely see signs that the consumer is pinched. Even whenever we're looking at earnings at a large scale, some earnings that we've watched this week that have really shown us that consumers are pulling back on discretionary purchases, especially large scale discretionary purchases. And when you look at companies like a Polaris, I know not necessarily in this realm, but they just had a horrible earnings event. Whenever you look at a company like Whirlpool, you see still a significant slowdown in consumers who are making these big purchases. And again, not necessarily equivalent to McDonald's in this realm, but we do see this sustained pressure on the consumer who is putting off a lot of purchases that aren't deemed necessary. I'm not sure that McDonald's would be deemed a necessary purchase for consumers, even if it is a much smaller purchase in scale. And so it's definitely still an environment where the consumer is definitely feeling the pressure from this persistent inflation. And so could be, we do expect this to be a continued headwind. However, we think that McDonald's pricing strategy, rolling out a value meal where consumers can actually take part in this menu and take part in transactions with the company, we do think that that's positive long term. And so we like this pullback. If we do see a pullback on earnings, we're certainly a buyer.
Yeah, and they didn't roll this out until the latter stages of the very end of the quarter also. So how much impact will guidance be affected to the upside also? We'll watch that. Great stuff as always. Megan, have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at LikeFolio. Alex, so